Welcome back to the deep dive. We're here to get you up to speed fast on the big global shifts. And today, we are diving straight into something everyone's talking about, the incredible run-up in gold and silver prices through 2025. I mean, gold surged over 40%, smashing records above $3,600 an ounce. And silver, wow, up around 45% this year, hitting over $41 an ounce. That's what, a 14-year high?
Yeah, it's truly remarkable. Historic levels for both, really demanding a closer look.
Absolutely. So our mission today is to really get under the hood, figure out the specific forces pushing these prices so high. We're basing this on insights from an independent educational platform, one that focuses purely on precious metals analysis, so it's solid stuff. We want to break down the immediate triggers like geopolitics, but also those, deeper economic trends for you.
And it's crucial, I think, to remember the historical backdrop. Gold and silver, they aren't just, any old commodity. They're seen as ancient stores of value, real safe havens. And that role, it really comes to the forefront in times like these, times of serious geopolitical and economic stress. What we're seeing now is kind of a powerful reminder of that history, maybe even amplifying their traditional role.
Right. So, okay, let's dig in. When we look at these immediate drivers, our sources point first to geopolitics, these big headline events shaking things up. What are the key recent incidents that have really moved the needle there?
Well, our analysis highlights two specific things that seem to really spike instability. First, there was that Israeli air raid on Hamas offices in Doha, Qatar. And Doha, that's not just anywhere. It's a really sensitive spot, right? Key Hamas figures are there. Qatar is a major mediator. Exactly. And that's the fascinating part. It's not just the military act itself. It's the diplomatic implications. Yeah. Qatar's been this vital, sometimes tricky, but vital channel for talks, hostages, ceasefires, that kind of thing. Hitting Doha risks, cutting those lines, makes de-escalation harder and just, ramps up the regional tension. It signals a narrowing of diplomatic options, and markets absolutely hate that kind of uncertainty.
Okay, so massive implications there. And then, almost at the same time, completely different region.
Yeah.
This Russian drone issue over Poland.
Yes. Detected and intercepted inside Polish airspace.
I mean, that's not just some border flyby. Poland's a NATO member. That's a direct violation.
It really is.
Yeah.
And it's a stark reminder, isn't it, of how fragile things are in Eastern Europe. Not some isolated blip. It definitely escalates the existing tensions between Russia and NATO. Yeah. Every time something like this happens, it raises the fear of miscalculation, something spiraling, and that puts pressure on NATO, on the U.S. to respond. But how do you do that without making things worse? The market sees that, feels that increased systemic risk, and factors it in.
So you've got these two really intense situations unfolding simultaneously, Middle East, Eastern Europe. Our sources are saying this really puts the U.S. administration under President Trump in a really tough spot, trying to back allies but also avoid, a much bigger conflict. How does all that uncertainty feed into gold and silver?
Well, this is textbook safe haven fund flow territory. When things feel this shaky globally, investors tend to pull money from riskier things and put it into assets seen as safe. Gold and silver are top of that list, historically. But it's more than just reaction. There's also what we call a geopolitical premium getting priced in. This isn't just about now. It's the market looking ahead, anticipating future trouble, potential disruptions, diplomatic breakdowns, maybe even worse, stemming from these tensions. That forward-looking concern, that feeling that maybe the basic level of global risk has just shifted higher, that keeps demand strong and supports prices, even when things seem quiet for a bit.
That idea of a structural shift in risk.
Yeah.
Yeah, that makes sense. Okay, so beyond the immediate crises, the headlines, what about the bigger economic picture, the stuff that's been building up? Because it can't just be these latest events, right? Our sources definitely flag monetary policies, specifically the talk around the Federal Reserve maybe cutting interest rates later in 2025. That seems huge.
Oh, absolutely pivotal. Yeah. When the Fed signals rate cuts, or actually does cut rates, it lowers the opportunity cost of holding something like gold or silver, which don't pay any interest.
Right. So if a bond pays less interest, holding gold suddenly looks better by comparison.
Exactly. If bonds are paying, say, 5%, holding gold costs you that 5% you could have earned. But if rates drop and bonds only pay 2%, suddenly holding gold doesn't feel like such a sacrifice. It's relatively more attractive.
Okay.
And that's often boosted by a weaker U.S. dollar, too, which usually follows rate cuts. A weaker dollar makes gold cheaper for buyers using other currencies. So it's kind of a double boost for precious metals demand.
Got it. So lower opportunity costs, potentially cheaper for foreign buyers.
Yeah.
Makes sense. But it's not only interest rates, is it? What about the general health of the economy? Are there other worries pushing people towards safety?
Yeah, you're right on track there. Beyond just the Fed moves, There's this broader sense of economic uncertainty, and rising debt is a big part of that.
Hmm.
Our sources point to specific things, like high levels of consumer debt are still a concern. We're seeing more people falling behind on credit card payments, delays in tax filings, which can signal financial stress for households and businesses. And don't forget the ongoing issues in commercial real estate. That hasn't gone away. All these things together, they paint a picture of, well, financial fragility. So investors, institutions, they see these cracks appearing and think, maybe I need something solid, something outside the traditional system to preserve my wealth. That drives people towards gold and silver as a hedge, a way to protect purchasing power if things get rockier.
Okay, so a mix of immediate fear and longer-term economic unease. Now, let's talk silver specifically. Gold gets the headlines often, but silver hitting those 14-year highs. That's really something. What's unique about silver's story right now?
Silver is, it's really got this fascinating dual personality. It acts like gold, the precious metal, the safe haven. But, and this is key, it's also critical industrial metal. And that industrial demand is, frankly, exploding.
Industrial demand. Like for what specifically?
Think about the big global trends, solar panels, right? Silver is crucial for conductivity in those. Electric vehicles, EVs need silver for electrical contacts, switches, battery connections. It's vital for reliability and performance. And then just electronics generally. Everything from your phone to complex industrial machinery relies on silver's properties. So this huge growing industrial use adds a whole other layer of demand that gold just doesn't have in the same way. It really juices the price moves.
That dual role, yeah, especially with the green transition and electrification, that makes a lot of sense. Is supply a factor too? Is it hard to get enough silver?
Yes, definitely. Supply constraints are a really important part of the silver story. It's quite different from gold. See, most silver isn't mined on its own. It's produced as a byproduct when miners are digging for other metals like copper, lead, or zinc.
Oh, okay. So its supply depends on the mining of other stuff.
Exactly. Which means silver supply isn't very responsive to silver's own price. If copper mining slows down, maybe because copper prices fall, then silver production can drop too, even if silver prices themselves are soaring. This creates a kind of structural tightness in the market. So you have the situation: booming industrial demand, strong safe haven buying, and a relatively inflexible supply. That's a recipe for strong price support, even amplification.
Right, a supply squeeze meeting a demand surge. Makes sense. Okay, let's zoom back out again. We've covered the immediate shocks, the economic backdrop. How do ongoing problems in different regions, these sort of simmering instabilities, keep adding fuel to the fire for gold and silver? Let's start with the Middle East again, but think about energy inflation. How do events there ripple outwards?
Ah, yes, the energy inflation feedback loop. It's powerful. Trouble in the Middle East almost always means volatility in oil and gas markets. Oil prices jump around, and that filters through the whole global economy. Shipping costs go up, manufacturing gets more expensive, and ultimately that feeds into broader inflation. You see it at the pump, in grocery prices, everywhere.
And gold loves inflation, right? Or rather, investors love gold during inflation.
Precisely. Gold is the classic inflation hedge. So when energy prices push inflation higher, gold looks even more attractive, especially because it puts central banks in a bind trying to fight inflation without crushing economic growth. That uncertainty further supports gold.
Okay, and what about Europe? We touched on the drone incident, but you mentioned broader instability there too.
Yeah, Europe's facing its own set of challenges. Our sources highlight things like political fragmentation in some key countries, the rise of different political factions making consensus harder, plus ongoing fiscal worries, government debt, deficits. All this creates uncertainty about the future direction of policy, and it can lead to volatility in currencies, like the euro. So we're seeing increased demand for gold within Europe, people buying physical gold or investing through ETFs. It's European investors looking for a safe harbor to protect themselves from their own regional risks, economic and political restructuring, that kind of thing.
So it really is a global picture, fears and pressures coming from multiple directions. Okay, so wrapping this up, what we've really unpacked today is this potent mix. You've got the immediate geopolitical shocks creating fear. You've got big economic shifts like potential Fed rate cuts changing the investment landscape. And then these unique dynamics, especially for silver with its industrial demand and tight supply. It all seems to be converging, feeding into this really powerful, sustained rally for both gold and silver in 2025. It's quite a moment.
It really is, and it undeniably reinforces those classic roles for precious metals. The safe haven, the inflation hedge. They're demonstrating their value in navigating what's clearly a very volatile and risky world. diplomatically, economically, financially. And just a reminder, of course, this is all for educational insight. It's not financial advice.
Absolutely. So, for you listening in, here's a final thought to chew on based on everything we've discussed. Given how interconnected all these global factors are now, the politics, the economics, the market mechanics, how might our very idea of what constitutes a safe haven asset change in the years ahead? Could traditional assets like gold and silver see their roles evolve? And maybe more interestingly, what other assets, perhaps things we don't traditionally think of as safe havens, might start taking on that mantle in our increasingly complex world? Something to ponder. Thanks for joining us on the deep dive.